Just yesterday, the economic report of the president was released. The White House report presents a negative view of digital assets, highlighting unfulfilled use cases and potential risks to consumers and the financial system. And this may actually indicate a shift in the Biden administration's stance, moving from neutrality to a more adversarial approach towards the entire crypto sector. On page 266 of the 513-page report, I'll summarize their perspective. Now, again, these are not their words. It's my summary of their words to give our audience a little bit of a break. But essentially, it says that illicit finance risks in the crypto asset space arise from their use in ransomware attacks, human trafficking, child exploitation, drug trafficking, financing rogue regimes, and terrorist activities. Crypto assets, according to this report, allow for easier laundering and obfuscation of payments due to their pseudonymous nature, and additional risks stem from gaps in international AML and CFT standards implementation, anonymity-enhancing technologies, the absence of financial institutions as intermediaries in some transactions, and non-compliant service providers. When crypto asset firms, according to the report, fail to adhere to regulatory obligations, criminals can more easily exploit their services and circumvent sanctions. That's a lot.
That's a lot.
Given the recent economic report of the president, which presents this negative view of digital assets and outlines these various illicit finance risks associated with them, how do you believe the crypto industry should address these concerns, and what steps can be taken to ensure regulatory compliance without stifling innovation in the space?
You know, we were pretty disappointed by the release from the White House. It seemed pretty short-sighted and, as you said, pretty negative about the potential of the technology. And it seemed to lack recognition that the technology is here. It's being developed, it's being used, it's being adopted. You can't put that back in the box. So we need to figure out how to regulate it, how to embrace it, how to make it work for our economy. In the With respect to illicit finance, and we hear these criticisms a lot. I think Chainalysis and their most recent report, Chainalysis, of course, an analytics company. I think that their most recent report said that less than 1% of crypto transactions are actually used for anything illicit.
It was 0.24%, which is less than a quarter
less
of
than
1%.
So, any amount of illicit activity is not good. We don't want that. We want to take steps and make sure that there are rules to prevent that. But the reality is that there are bad actors in every form of finance. We fully support at the Crypto Council rules and regulations that make that more difficult. With blockchain, though, law enforcement actually finds blockchain to be a really helpful way to track criminals, because if you've ever looked at a blockchain and looked at wallets, it actually is pretty transparent in how you can see the connection of transactions. So there's actually a lot of ways that, crypto companies are helping law enforcement to look at not just sanctioned entities, but then what sort of other entities those entities are connected to in a way that is harder to do with traditional finance. So we acknowledge that illicit finance concerns are very real and they need to be addressed. And policymakers are thinking about the best way to address those when, as you said, there are not as many intermediaries. Taking out intermediaries is both a tremendous opportunity and a tremendous benefit for consumers in terms of cost savings and efficiency. But there are also other circumstances that need to be addressed and other risks that need to be addressed, given that change in dynamic. So we appreciate that work is being done, but I think the characterization of crypto as just being for illicit finance is akin to, 30 years ago saying that the internet was just a place to watch pornography. It's not, I think, a well thought out view of the potential for the tech, not just in finance, but beyond finance in the way that we do so many things. So, we're looking at the report, as you said, it's 500 and something pages. We're doing a deeper analysis and we'll be coming out with something to respond to some of those specific points with our positions and with what we view as sort of the reality of the industry and where things are headed.
In some ways, it's a backwards looking perspective and narrative to punish judge and sanction a technology simply because it might be misused. All technologies are misused, unfortunately, whether that's the internet, the telephone, the cellular phone, the dollars in your wallet, the real estate that you purchase, the vehicles that you drive. All of those can be tools for money launderers and illicit financiers and traffickers. But yet we don't shut down those technologies. We don't chase those technologies to the far corners of the earth where they might be actually less regulated. So when we think about, as an industry, educating regulators and policymakers here in the United States, and you made the really good point a couple of minutes ago about how data analysis will be critical to effective education on the Hill and at various agencies. Is it your perspective, having worked in government, that policymakers and regulators need a grand education on crypto, its use cases, and the value of this technology? Or do they already have a grasp of that and it's the fine-tuning that's needed? I'm struggling to understand what level of education is really necessary.
Well, I want to respond to the first point that you made about tools for criminal activity.
Please.
And you're absolutely right. I mean, how often do we all now get text messages from someone saying, "Click this link and this is your reward," or "this is," and we know not to click it. There are some people that probably click it and are victims of a scam or whatever. I don't know what the ultimate goal of those are, but we don't say because of that we can't have text messages. And I think about it very similarly, as you said very eloquently, that there are so many technologies and innovations that have brought so much benefit to our way of life and doing things that also come with risks and opportunities for bad guys. And there are bad guys everywhere, right? In every space. And we need to take steps to make sure that they have a much more difficult time accessing consumers and investors. And we believe that having a regulatory framework would prevent that, would certainly mitigate it and make it more difficult, more challenging. But to answer your question about the level of education amongst members, I think it varies tremendously from member to member. There are some folks who have been, interested in the crypto space for several years, and so they have a much deeper knowledge. And then there are some folks who are really just now starting to pay attention to it because of all the attention that it is getting on Capitol Hill and the various legislative proposals that are out there. So I think from an advocacy perspective, it's very important that as an industry, we tailor some of our education. I think, as a former Hill staffer, when I was young and I was 24 and trying to figure out financial services policy, you go to a briefing or some type of meeting and the information is way too granular. It's way too weedy. And you're like, well, I feel like I didn't get anything out of that because I didn't have the correct foundation. I needed to start at the basics. So I think we need to make sure that we're being mindful of that there are some offices, certainly, off the committees of our jurisdiction, who've been less focused on it and really need to start with the basics of the potential for the technology, where things stand. And then there are some that are well beyond that, and we can go a little bit deeper into the very specific questions about securities laws and the specific legislative proposals that might be out there that we support. But it has to be tailored, with everything that we do. And I think that's important to remember.